Okay, welcome guys to this paper. We're going to do the cash flow statement. Yeah, so it's from DBE 2021. My apologies, the paper is not very much clearer, but hopefully you will bear with me and you'll be able to see. So let's go through the paper. Remember, it's DBE 2021. Then we're doing the cash flow statement for 35 marks. 35 marks for 30 minutes. It's very important to stick to the 30 minutes. If still time is a problem, keep on training yourself. Practice as much question papers as you can. Practice as much as you can. You'll one day be able to be on time and finish on time. So practicing is the only thing that will help you. Now let's go to the required. Okay, the information says this information relates to the Digital Giants Limited. The financial year ends on 31 March. Okay, the required. Calculate the following financial indicators for the financial year. The year that ended on 31 March 2021. So 3.1.1, they are saying we must calculate the debt equity ratio for 3 marks. Okay, debt equity ratio. Simple thing. Let's do it. Sorry. Okay, so I will use this answer sheet to answer. Remember, debt equity ratio stands for what? Debt stands for loan. Equity stands for shareholders equity. Shareholders equity. Okay, so basically what we are doing here, we are dividing loan with our shareholders equity. We take our long-term loan, we divide by our shareholders equity. That's what we are supposed to do here. Okay, so let's go to our information and check our loan amount. Okay, let me put my phone on flight mode because I could get disturbed here. Flight mode. Okay, it's fine. Let's continue. I hope I don't get disturbed. Okay, so we have to go to our information and check a loan. Let's go to our information and check the loan. Information. Okay, our informations begin here. Information A. So there is nothing about loan here. So we go to the next page. Our next page. Is there anything about loan? Yes, here. This is our mortgage loan. Mortgage loan. So we take our mortgage loan in 2021. Remember, we're dealing with the current year. So our mortgage loan in 2021 is 2,450,000. Okay, so we're going to take it and put it under loan. So we put it under loan, 2,450,000. Then divide by shareholders equity. That's what the ratio says. That's what debt equity ratio says. You take your loan, you divide by shareholders equity. So let's check shareholders equity on our information. Okay, shareholders equity here. Our ordinary shareholders equity is as follows in 2021. We have ordinary shareholders equity of 10,387,600. 10,387,600. Going to take that amount as it is. Then we're going to put it there on our answer book. So it's 10,387,600. That's our loan. That's our shareholders equity. All together they give us what we call the debt equity ratio. Now let's calculate. That's exactly what you are required to do on your exam. Now let's calculate our debt equity ratio. Okay, on my calculator I'm going to say 2,450,000, which is our loan, divide by our shareholders equity. Our shareholders equity of 10,387,600. 87,600. Then the answer that we get, as you can see on the calculator, is 0.23. Okay, that's it. You can say 0.24 if you like, you can round off. Okay, so let's put it there on our answer book. So in simple terms, this means what then? What does this mean? It means we're going to put it like this. Our loan is 0.24, then is 21. That's how you write a financial indicator. So let's put it in our answer box. Is 0.24 is 21. That's the answer for debt equity ratio. You'll get your 3 marks there. What does that mean? It means our debt is 2,450,000. I mean, it means our debt in percentage, our debt in percentage is 0.24% versus our equity, which is 1%. Our debt and our equity. So our debt is smaller than the equity that we are having in the company. Because remember, debt stands for loan. Equity stands for shareholders' equity. Just like that. Now let's move on. Let's not waste much time on this one. Let's move on. Next question. Okay, next question. They said we must calculate the net asset value per share. Net asset value per share. All right. So net asset value per share, it simply means you take your shareholders' equity and you divide by the number of shares issued at the end of the year. That's what net asset means. Net asset means shareholders' equity. Shareholders' equity. Then per share. What does per share mean? Per share, it means you must divide by the number of shares issued. Simple as that. When you see net asset, you know net asset stands for shareholders' equity. Then per share, it means you divide by the number of shares issued. So in simple terms, what do they mean here? They mean we take our shareholders' equity and divide by the number of shares issued. That's the formula. You don't have to go and crack your head with cramming these formulas. Just by reading it as it is, it gives you the clue. So net asset, we said it stands for shareholders' equity. Shareholders' equity. That's our net asset. Then per share, what does it mean? It means divide by the number of shares. Number of shares in issue at the end of the year. So we're going to take our shareholders' equity and divide by the number of shares in issue at the end of the year. So let's go now to our information and check our shareholders' equity as well as the number of shares that we have issued. Okay, already we have been speaking about our shareholders' equity. Here it is. Ordinary shareholders' equity is 10,387,600. 10,387,600. Going to put it there. Is 10 million our shareholders' equity, 387,600. We follow our formula. Then our formula says take your shareholders' equity and divide by the number of shares issued. So we have to divide by the number of shares issued. Let's go and check our information. How many shares are in issue? Okay. Here is our shares information, which is information number C here. Our shares at the beginning of the year, they said we had 700,000 shares in issue. There were 700,000 shares in issue on 31 March 2020, which is the beginning of the year. Then bullet number 2, they said 120,000 new shares were issued at 12.60 per share. Okay, we have issued new shares. It's a plus 120,000, which means our shareholders are growing. Then now, on the last bullet, they said 20,000 shares were repurchased Repurchased, it means we have bought back the shares. Those people are no longer our shareholders, so it's a minus. Our shareholders are decreasing by 20,000. That's it. Then we have to get the final answer. Could see at the end of the year, how many shares are we having? Simple. 700,000 plus 120. So it's 700,000. Sorry, 700,000. Oh, is this 7 million? Okay, 700,000 plus 120,000 minus the repurchase of 20,000 here. So our answer will be 800,000, which means at the end of the year, we are left with 800,000 shares issued. People who are holding shares in our company, they are holding 800,000 shares. That's how I got it. That's how I got it. That's how I got it. You take the beginning 700,000 that were issued at the beginning plus the one that were issued during the year, new shares, and then minus the one that were repurchased. You will get at the end 800,000 shares. Okay, so we know, back to our answer book, we know that we have 800,000 shares issued at the end of the year. Okay, now let's punch our calculator to get our net asset value per share. So it's 10 million. Put it here so that it becomes visible. It's 10,387,600 divided by 800,000. So our net asset value per share, you can see, is 12.98. So that one will be rounded off to just 12.98. 12.98. So that's your answer. Your answer is 12.98 cents. That's your net asset value per share. Okay. Okay, let's move. Now let's go to dividend number 3. Calculate the dividend payout rate. Now this chapter, guys, is that chapter that is supposed to give you marks for free. Make sure you get everything in this chapter. Make sure. Now let's calculate the dividend payout rate. The dividend payout rate. Okay. Dividend payout rate. Dividend payout rate is simple. The formula says dividend per share divide by earnings per share. Simple formulas. This information they give us. Okay, now let's go and check our dividends per share as well as our earnings per share so that we divide these two things. Let's check. Okay, there we go. Just by the look of things on information number F right here, information number F, you can see something written, earnings per share. Then the earnings per share, they said is 350. I mean, it's 350 cents. 350 cents. That's the earnings per share. So we already know the earnings per share is 350 cents. Let's go and put it there in our answer book. Earnings per share, which means we're going to divide by 350. Now the only thing that's left is what? Is to get the dividends per share. Let's go and check the dividends per share on our book or our question paper. It's information number D, where they are talking about dividends paid and declared. Remember, we have two types of dividends. We have interim and we have final. So they've already given us the dividend per share. Interim, they say it is 45 cents. Then the dividends per share for final, For final, they said it's 32 cents. Let me put a charger, guys. Let me put on a charger. I will pause the video a bit. Okay, guys, let's continue where we left off. So I was just putting on a charger. All right, so this is our earnings per share. I've already put it there, and we got it from here where it's written earnings per share, right here where it's written earnings per share. Okay, now let's check the dividends. We have two types of dividends. We have the final dividend and the interim dividend, final and interim. So they gave us here, so the interim they said is 45 cents, then the final they said it's 32 cents. Yes, sometimes they will not give you these dividends per share. What they will give you is the total amounts, and in order to get dividends per share when they've given you the total amount, it's simple. You just take the total amounts, divide by the number of shares issued. So it will be this amount divided by 800,000. You were supposed to get this. And this amount for interim divided by 800,000. You were supposed to get this 45 cents. So you must know how to work around these things, because sometimes they might not give you everything. Okay. So as we've said, the interim is 45 cents. The final is 32 cents. Now you combine these two type of dividends. You are going to say, okay, 45 plus 32 plus 32 cents. So it gives us 77 cents. So we're going to say 77 cents. That's our dividends per share. It's 77 cents. We have combined the interim plus the final, and it gives us 77. So now we're going to take our 77 cents, which is dividends per share, and then we divide by the earnings per share of 350. Divide by 350 times 100. Don't forget that which you are supposed to put multiply by 100, so that it goes into percentage. So our answer will be 22%. What does this mean? It means on all our earnings, we pay 22% of our earnings into dividends. All the money that we earn in the company, 22% of it goes into paying dividends. That's the importance of knowing how to calculate the dividends payout rate. Now we're done with that one. Let's move on to number 4. Number 4, they are saying we're doing what? Calculate the return on the average shareholders' equity. Calculate the return on the average shareholders' equity, also known as ROSHARE. ROSHARE, the average shareholders' equity. Okay? This is the formula. Return. Once you see the name return, it stands for net profit after tax. So I will write it down. Return stands for net profit after tax. Okay, that's the return that we got. That's the money that we got after we did everything. That's the return. The profit after tax. It's a return. So without even claiming those formulas, you can simply know what is a return and just write. And then what does this on mean? Return on. What does this on mean? On means you must divide. Also, it means return is on top of something. On top of what? Of the average shareholders' equity. That's it. Return is net profit after tax on top of the average shareholders' equity. So average shareholders' equity is what? You take shareholders' equity here last year plus shareholders' equity for this year. Then you divide that answer by 2. It will give you what they call the average shareholders' equity. So you see, it will be return, which is net profit after tax, on, which means divide by average shareholders' equity. Shareholders' equity from last year plus shareholders' equity of this year, divide by 2. That will give you your share. Now let's put in the numbers. Let's look for our net profit after tax. Okay, there is nothing about net profit after tax here. We go down, there is nothing here. So let's use the other page. We go and check net profit after tax. All right, down there is net profit after tax. If you can see here, that's your net profit after tax of 2,870,000. If they did not give you net profit after tax, maybe they will give you net profit before tax. You will have to convert that into net profit after tax. Or maybe sometimes they will give you income tax and say the tax rate is 28%. You simply take that income tax, divide by 28 times what you want. If you want before tax, it's going to be 100. If you want after tax, it's going to be 70 whatsoever. Yeah, but now we are not there. They've already given us the net profit after tax, which is 2,870,000. So we go to our answer book and we put it there. So our net profit after tax is 2,870,000. Let me recheck. 2,870,000 divided by the last year's shareholders equity plus this year's shareholders equity. Let's check last year's shareholders equity and this year's shareholders equity. Remember, shareholders equity is here on this box. We've already done it. So the shareholders equity of last year, as you can see, this is 2020. Then this is shareholders equity for this year, 2021. So shareholders equity for last year is 6,910,000. I'm going to put it down. Last year is 6,910,000 plus. It says plus shareholders equity. Yeah, this year. Let's check this year. This year we have shareholders equity of 10,387,600. 10,387,600. That's it right here. Shareholders equity right here. 10,387,600. 10,387,600. That's our shareholders equity. Remember, the formula says then you must divide by 2. Let's do it. We're not done. Let's divide by 2 and get the final answer for the average shareholders equity. So it will be 6,910,000 plus 10,387,600. It gives us, then we divide by 2. Okay, that will be our average. I hope I calculated correct, but let me repeat to be accurate. It's 6,910,000 plus 10,38,600 gives us this amount. Then we take this amount, we divide by 2. Okay, different amounts. Let me do it one last time. It's important to do it one last time, guys, so that you know your answers is accurate. And you are supposed to get a distinction. How are you going to get a distinction if your answers are not accurate? So recheck your answers. Plus 10,38,7,600. It's equals to, okay, divide by 2. All right, we get the one that we got at the beginning. So I believe this one is the correct one. So now let's put it there. It will be 2,870,000 divided by 8, 6, 4, 8, 800. Remember to put times 100 as a percentage. Now let's do it. Let's punch the calculator again. So it will be okay, 2,870,000. All right, 2 to be 2,870,000. Divide by the average shareholders equity of 8,648,800. Then we get 0.33 times 100. So our raw share will be 33.18%. Alright, that's it. That's how you get the return on average shareholders equity. Okay, guys, if you did not hear it well, go back and rewatch the video while I was explaining it, because we are trying to save time. It's better this is not a class where you'll be afraid to ask a question. Here, everything is just available for you. You won't be afraid to answer any question here. Everything is available for you. You just go back and rewatch the video, yeah, for your benefits. Now we are done with these three parts. Let's go to 3.2.1. 3.2.1, they said calculate the following for the cash flow statement. You must calculate the change in receivable. Change in receivable. Now, change, guys. Change. They want to see how much have the receivable changed from last year to this year. How much have our receivable changed from last year to this year? So we are going to take our trade and other receivables for this year minus our trade and other receivable for last year. Then we write the change here. Then we decide whether it's an inflow or an outflow. Receivable, remember, it's made up of debtors. Most important, it's made up of debtors. Debtors are the people who owe us money. So if the people who owe us money last year, let me put it like this, receivable. Receivable, they owe us money. If the people who owed us money last year versus the people who owe us money this year. If last year we had 3 people who owed us money, and then this year we had 5 people who owe us money, you can see with a lot of people are owing us money, which means this is an outflow. Outflow of cash. Why is it an outflow? Because people have maybe actually came to buy our goods or borrow money from us whatsoever. So if the people who owe us money have grown, it means it's an outflow of cash. The opposite is true then. What do I mean by that? Now, let's make another example. Last year versus this year. If the people who owe us money last year, they buy 5, then this year, say buy 3. You see, with this year, we have less people owing us money. We have less people owing us money. What does that mean? It means this is as a result an inflow of cash. It's an inflow of cash. Why is it an inflow? Cash is coming in because last year they were owing us a lot of money. This year they are owing us less money, which means they have paid us. If they have paid us, it means cash is coming in. So that's how you find out whether it's an inflow or an outflow. Now, you can go to your textbook and refer with what makes up trade and other receivables. What makes up trade and other receivables. But remember, the most important, debtors control, and then accrued income, which is income receivable, and then prepaid expense. Yes, go and revise your textbook to check what's on trade and other receivables. So now let's do it here. Okay, let's check on our balance sheet information, our trade and other receivables. If you can see here, they did not write anything by the name trade receivables. What they wrote is what? Debtors control. So you already know debtors control forms part of your trade and other receivables. Let's check again. What else forms part of our trade and other receivables? Creditors control does not. Income received in advance. This one does not form part of trade receivables. This one forms part of trade payables, income received in advance, because we have received the money. Maybe they are paying rent for next year. They are paying us rent for next year. They decided to pay it this year. So if by next year they decide not to stay in our place, it will mean we owe them money. So why? Because they haven't stayed in our place, but they have already paid the rent. So if this happens, next year they decide not to stay in our place, we have to pay back the money that they gave us. So this one, income received in advance, it means it's a trade and other payables. We owe people money. We owe people money because they gave us an income in advance. So this one is not a trade in other receivable. So far, the only trade in other receivable I got is debtors control. Let's check. Nothing else. So we are only going to use debtors control for trade in other receivables. So last year we had 390,000. This year we're having 418,000 people who owe us money. Remember, debtors are people who owe us money. So last year there were less people who are owing us money at 390,000. This year there are more people who are owing us money at 418,000. Now remember this logic. If there are more people who are owing us money, last year there were less, this year there are more. That means it's an outflow of cash. Go and revise this part to hear why I say it's an outflow of cash and why it's an inflow of cash. Okay, now back to this. Okay, last year 390,000, this year 418,000. We put that in our answer sheet. Trade and other receivable. Okay, last year versus this year. Last year we got 390,000 debtors, people who owe us money. How about this year? This year we got 418,000. So we're going to write this year we got 418,000. That's it. So let's get the answer. 390,000 minus 418,000. We get 28,000. The change is 28,000. That's the change in the receivable. Because last year there were less people who are owing us money. This year there are more people who are owing us money. So they changed by 28,000. Now decide, is this change an inflow of cash or an outflow of cash? Okay, you already know. Since last year they were less, this year they are too much. It means it's an outflow of cash. People have came into our business and took our money, took our stock without paying. That's an outflow of cash. Done with that one. That's how you... Free marks, guys. 3, 6, 9, 10, 11, 12, 13, 14, 16 marks. All these marks are mahala. Free marks. Free marks. Free marks. All these marks. Make sure you master cash flow statement on your exam. You get a total out of it. It's an easy chapter, this one. Don't disappoint. But you know, the only trick is to practice. So if you don't want to practice, you will fail. There is no magic. If you don't want to practice, you will fail. You can listen to me shumayeling and preaching all day, but the most important part is for you to practice. Without that, nothing will happen, my friend. Yeah, nothing will happen. I'm here to help you and show you some of the things that you sometimes miss out in class and you don't understand. I'm here to clarify them for you so that when you are practicing, it becomes simple. You can just refer to the video when something you don't understand and you are far away from your teacher. Just refer to the video and then you learn. I can speak the whole year, but if you don't practice, nothing will come out. You will get level 1, level 2. Practice harder. Don't play. Okay, now let's go to 3.2.2. For the cash flow statement, calculate the change in payables. Remember, ekuqaleni we're calculating change in receivables. Now we're calculating change in payables. What are payables? Payables are people who we owe money. I will make another example again of payables. Remember, this one was for receivable. This one was for receivable. On the other side, I will make an example of payables. Payables, we owe them. We owe them money. Payables, we owe them money. Okay? Now we still do the same thing last year versus this year. Last year versus this year. Now, here is the trick. Let's assume last year we had 3 people who we owe money. Then this year we have 5 people who we owe money. Can you see? The people we owe money have grown. We owe people a lot of money. So is this an inflow or outflow of cash? Simple. This is an inflow of cash. You may wonder now, why is this an inflow of cash, but we are owing people money? Why is cash coming in our business, but we are owing people money? It's very simple. When you go to the bank and then you go to Capitec, you ask for a loan, Capitec will give you that loan. Then that money will come and put it in your business. That's an inflow to your business. Even though you owe Capitec money, but it's an inflow to your business. Another example, if you are buying stock on credit, obviously you are owing those people because you are buying a squelette, you are buying on credit, you owe those people. But for the fact that you are going to take that stock and use it in your business, that means it's an inflow because the stock is coming into your business. I hope you understand. If you don't, repeat the video again. Now let's make another example whereby it's the opposite. So let's take our payables last year versus our payables this year. Last year, let's say we were having 5 payables. This year, we are having 3 payables. What does this mean? Payables are people we owe money. So if we're having more people, if we're having less people that we owe money than last year, it means we have paid people money. We have actually now taken money from our own pocket and went to Capitec and paid them. So this will result in an outflow of cash. I hope now you understand. Now, back to the example. Let's check payables. Remember, you have to know what makes up payables. Go to your textbook and revise. Payables. Okay. People we owe money. People we owe money is made up of creditors control. It's made up of creditors control. Creditors control are the people we owe money. Okay. Remember, I also spoke about this. This one called income received in advance, whereby if they pay us rent this year, but they haven't started staying with us, they will start staying with us next year, but they pay this year. So it means we owe them money, because anytime if they decide that they don't want to stay with us, we have to pay them that money. So this forms part of our trade payables. So we have 2 trade payables. Last year we had only one, 359, 200 and 0 ngala. Then this year we have 520,000 and 16,000 for income received in advance. Now let's put it. Last year we had trade payables or creditors control of 359,200. Let's put it in there. Last year versus this year. Last year we had 359,200. Let's check this year. Last year we had 359,200. Let's check this year. So this year we have 2 of them. We have 1, 2. So I'm gonna calculate it. It's going to be 520,000. 520,000 for creditors control. 520,000 plus 16,000 for income received in advance plus 16,000. So this year we have a total of 536,000. 536,000. Let's go and put it in our answer book. So it's 536,000. Okay. Now let's do it. It will be 359,200 minus 536,000. So that will give us an amount of 176,800. We put the answer there, 176,800. Now the main task is to decide whether this is an inflow of cash or an outflow of cash. Remember, last year we were owing people less money. Then this year we are owing people a lot of money. What does that mean? We are owing people a lot of money. It means we went to the bank and took money. Then that money came into our business. So it's an inflow. Go and revise this part. Go and revise this part on the video. You will understand. Okay. We are done with the first part. We are done with the first part. We are done with the first part. We are done. Okay. This is the DBE 2021. If you do have the question paper, you can just simply go and do it again and check if your answers will be the same. Yeah. So where do I get this question paper? You can simply download them at, this is the website here. I don't know if you can see. That's where you can download these papers that I'm doing here, and you can also do them again. So let me write the website in dark pen so that you can be able to see. It's Stanmore. Okay, let me check again. It's Stanmore. Physics.com. So you can use this website to download all the papers and do it again, practice with them, and check the video again to see if you did right or if you need any assistance. The website is stanmorephysics.com. So now let's go to the other part of the paper. Other part of the paper, what do they want us to do? Calculate the taxation paid. This is another thing that will not, it will be always be part of your exam. Whether you like it or you don't, it's there. So you better know it. Calculate taxation paid. I will just give you something for taxation. For taxation, here is the note that I use. Simple one. You are going to say from financial statement. From financial statement. What is this from financial statement? This is the income tax. The income tax from financial statement. Where do we find it? Simple. Let me show you here. What's the name of that financial statement? The name of that financial statement is called the Statement of Comprehensive Income, which is the income statement. That's where we get the income tax for the year. Income tax for the year, which is 1,085,000. But we'll get back to it. Now, the question is, what happens if they did not give you this income tax? What will you do? Simple. They will give you the before, then they will give you the after. They will give you the after tax and the before tax. You simply take the before tax minus the after tax. You will be left with what? You will be left with the income tax for the year. So that's the income tax from financial statement that they are talking about. Remember, you will always get it from the Statement of Comprehensive Income. Now let's move. What follows next is Sars Income Tax at the beginning of the year. Then Sars Income Tax at the end of the year. This one you get it from balance sheet. Let me show you where you get it from. Here, this is our balance sheet extract from the financial position statement, the balance sheet. So let's check income tax is this line. And then, so Sars income tax beginning 2020, it was 124,000. Then 2021 Sars income tax is 354,000. Now let's go back and try. Let me try to give you something that will help you master. That will help you master. Sars income tax taxation paid. Simply throw this box. If you don't understand anything, just cram and throw this box. On this box, you will say, okay, there is debit, there is credit. Cram this box is as simple as ABC. So, what does this thing mean? If Sars income tax at the beginning of the year, which is 2020, and Sars income tax at the end of the year, which is in this case is 2021, if at the beginning of the year it's written debit, meaning it's under trade receivable. If Sars income tax at the beginning is written debit or is under trade and other receivables, it means it's a plus. Which means you will put your plus here. You will add that amount. How next? Sars income tax at the end. What if Sars income tax at the end is on debit? What will you do? You simply put a minus. And then next thing, let's go to the credit side. What if Sars income tax at the beginning is on the credit side? Credit side is also known as trade and other payables. What if Sars income tax at the beginning is on the credit side or on the trade and other payables account? What will you do? You will put a minus. Then what if Sars income tax at the end is on the trade payables or still on the creditors control? You will put a plus. That's the box that you have to know is Sars income tax. Sars income tax. Beginning debit plus, like, just revise this box, man. That's it. So now let's try to use this box to get our answers here. Okay, we are going to look for Sars income tax at the beginning of the year to see whether it's in debit or in credit. Sars income tax at the beginning of the year to see whether it's in debit or it's in credit. Okay, now let's go. Sars income tax, here it is. So let's go to beginning, which is 2020, ne? Okay, more space. Beginning, which is 2020. So Sars income tax at the beginning. Where is it? Okay, 9. At the beginning, Sars income tax is 124,000. 124,000. So what does our box say? When Sars income tax at the beginning, what do we do? What do we do? Remember that they said Sars income tax at the beginning is 124,000 and brackets debit. They said it's in the debit side. Sars income tax at the beginning is at the debit side. So what does our box say? Our box say when Sars income tax at the beginning is on the debit side, it's a plus. So we're going to put a plus on our answer sheet. How much is it, by the way? The Sars income tax at the beginning is 124,000 and it's on a debit, so it's a plus 124,000. So we're going to say plus beginning is 124,000. It's a plus. You see, I did not put a minus. It's a positive amount. Now let's check at the end. Sars income tax at the end. Sars income tax at the end is on the credit. You can see it's written credit here on 2021. So it's 354,000. So what does our box say? We consult our box. Sales income tax at the end, they say is on credit. So what do we do? Sales income tax is on credit. It means we are supposed to plus. So we are going to say plus again. Plus what? 354,000. So let's put it in our answer book. Sars income tax at the end is on the credit. So it's a plus 354,000. Now your final answer. But before you write your final answer, there is one left there from financial statement. Remember, I said this one, it's always in brackets because it's the income tax for the year that we find from the income statement. Always in brackets, no matter where you go. Now let's check it. Sars income tax from the statement of comprehensive income. So this is our income tax. It's 1,085,000. Going to put it there. 1,085,000. 1,085,000. That's it. Now let's punch the calculator to get taxation paid. So it's 1,085,000. Remember, it's a minus, ne? So when you punch your calculator, you are supposed to start with a minus. Minus 1085,000, which is this one. Then this one at the beginning is a plus. Plus 124,000. This one at the end is also a plus. Plus 354,000. So we get 607,000. And it's a minus, which means your answer will be 607,000. You are done with your Sars income tax paid. Don't forget this box in order to find out why I said plus here, why I said minus. Revise this box. Go back to the video and repeat it again. Now we are done. There is another thing that does not, it will always be there on your exam. It does not make a mistake of not being there. This one is called what? The dividends paid. Calculate dividends paid. Okay, remember guys, in dividends there are two kinds of dividends. There is interim and then there is final. The other name for final is called shareholders for dividend. Shareholders for dividend is the other name for final. Why do they call it shareholders for dividend? It's because we are still owing these shareholders a dividend because we have declared it last year. We will pay it this year. Final dividend, we declare it this year and then we pay it next year. We declare it last year, we pay it this year. I don't know if you understand what I mean. Let me make a practical example. If we declare final dividends this year in 2022, we are going to pay that thing in 2023. Do you get that? That's why it's called dividends paid. So we're going to look for the one that is written shareholders for dividend. Ya nini? Ya last year. We're going to look for shareholders for dividends for last year. Why shareholders for dividends for last year? Because if we declared it last year, we're going to pay it this year. And hence we want what? Dividends paid. That's why we want the final dividend that we declared last year. So you are going to simply go to your paper and look for shareholders dividends last year. Then you write it here. Simple as that. Now, how about interim dividends? The other name for interim dividends is ordinary share dividends. Ordinary share dividends. This one we want here this year, ne? Don't mistake it with final dividend. Interim dividend, we want the one for this year. We want the one for this year. It's only the final dividends that we want for last year. So familiarize yourself with the names. Sometimes they will call it shareholder. Actually, always they will call it shareholders for dividends. If final will always be called shareholders for dividends. But interim, sometimes they will call it interim. Sometimes they will call it ordinary share dividends. Just finalize it like yourself with its nicknames, because it's important to know names of things. If you don't know both names, you only know one name, you'll be confused one day when they tell you the other name, and you will think that's not it because you are only used to one name. So know both names. Now let's go and check them. Remember, final dividend, I said we want shareholders for dividends last year. Let's go to our paper. We want shareholders for dividends last year. This is the shareholders for dividend here on the bottom. This is the shareholders for dividends. Remember, shareholders for dividends stands for final dividends. Don't forget that. So, do we want here this year? No. We want shareholders for dividend from last year, which is 210,000. Not here this year. We want here last year. Why here last year? Because we have declared it in 2020, so it's going to be paid in 2021, which is the following year. So last year is 210,000. I will go and write it. All right, shareholders for dividends last year is 210,000. Now we are only left with what? Interim dividends. And guys, final dividends is always given. Like most of the time, most of the activities, final dividend is always given. The only thing you have to know is its name. You have to know what they call it, shareholders for dividend, and we want last year. Once you know that, you will always get it. You are always given free mark, nothing difficult here. Now let's go to interim dividends. Remember, I said interim dividends, they sometimes call it what? The ordinary share dividends. They sometimes call it the ordinary share dividends. Sometimes they call it interim. Let's go and check these things. Do we have any ordinary share dividends here? No, we only have ordinary share capital, so it's not ordinary share dividends. Now let's go and look for anything written interim. Okay. Interim dividends here. They said 15 August 2020 is 46 cents. Right? Now here's the trick. The date is very important when it comes to interim dividends. The date is very important. What does this date mean? It means we have paid an interim dividend of 45 cents on 15 August 2020. We paid a dividend on 15 August 2020. So what does that make you, like, what do you do with that? Simple. You have to write your timeline when it comes to interim dividends, especially if they did not give you. But if they gave you, you just take and paste. But if they did not give you, like here, they did not give you, you have to write the timeline. Why do you write the timeline? You have to know, on 15 August 2020, how many shareholders or how many shares have you issued, so that you can be able to multiply that number by 45 cents, which is the dividends per share. Which means if a person owns one share, we're going to pay him 45 cents. If a person owns two shares, we're going to pay him 45 cents times 2. If a person owns 3 shares, we're going to pay him 45 cents times 3. If a person owns 1 million shares on 15 August, if a person owns 1 million shares on 15 August, what do we do then? Simple. We're going to pay 45 cents times the 1 million shares. You see? 45 cents times the 1 million shares that he was owning in 15 August. But don't forget, that 1 million is just my example. We don't know how many shares have we issued on 15 August. That 1 million was just an example. So we have to know how many shares have we issued on 15 August, so that you can take that number and multiply by 45 cents. Let's draw our timeline. to know. Remember, our year begins on 1 March and then it ends on 28 February. Begins on 1 March, ends on 28 February. Okay, so what is this 1 March? Is it 2020? Yes, it begins in 1 March 2020. Then it ends when? Remember, financial year, you know it, guys. You can study it like from even here. You can see 2020 was the beginning, 2021 was the end. Okay, so it begins on 1 March 2020 and then it ends 28 February 2021. Now, what do we do with this timeline? We go to our shares information. We go to our shares information. We check the dates. With on this date, what happened? And so on up until we reach 31 August. 31 August, which is when we paid the interim. So let's begin from the first date. The first date is what? From our shares. They are saying 700,000 shares were in issue on 31 March 2020. Okay, March 2020 is right here on our timeline. So we issued how much? 700,000. It's a plus because we issued. Then done with that one. Let's move on to the next one. Number 2, 120,000 new shares were issued at 12.60 per share on 1 April 2020. April, March, April is around here. April. So they said we issued a further 120,000 shares. That's another plus. Then the third one, they said 20,000 shares were repurchased on 31 March 2021. Where is 31 March 2021? 31 March 2021. This is February. March is around there. So I think this one does not even concern us. This March 2021. It does not even concern us. Why doesn't it concern us? Because our year ended on 28 February. First thing first. Then the second thing, what? Our interim dividends was paid on 15 August 2020. You see? Yes. So this is April, May, June, July, August. You can see in August there is nothing so far. So we ended here. That's when we paid our interim. That's when we paid our interim. So on this date that we paid our interim, how many shares were we having? We're having 700,000 plus 120,000, totaling to how much? 820,000. You see? So we had 820,000 shares on the date of August where we paid our interim. Go and revise the video if you do not understand how we got here. It's simple. You will understand. And it's better because it's a video. You'll just go back and revise on your own, unlike in class where you'll be afraid to ask. Okay, so this is 820,000, the number of shares that we were having on 31 August or on 15 August when we paid our interim. Remember, our interim is 45 cents. They said it's 45 cents per share. Simply, we're going to take 820,000 times 45 over 100. If you don't know how to put in cents, you can say 45 over 100. Then we're going to get how much? 820,000 times 45 over 100. So we're going to get 369,000. 269,000. Why did we multiply by 45? Simple. Interim 15 August, we're having 45 cents per share. And then on that date, on 15 August, we had how many shares? 820,000 shares. So we simply take that 820,000 multiplied by 45 over 100. Which is the 45 come from here, the interim dividends per share. So we're done. We're going to take this 369,000 and put it under interim dividends. 369,000. Okay, so our interim dividends will be 369,000. Now let's totalize. Going to say 369,000 plus 210 and 210,000. So we're going to get 579,000. That's the dividends paid. If you have any question, go back to the video or you can comment there. I will reply. Now the next thing, 3.3.3, what do they do? Calculate the proceeds from sale of fixed assets. We're almost done. We're left with 2 questions. Then calculate the proceeds from sale of fixed assets. Proceeds. What does proceeds mean? Proceeds, it means we want the fixed assets that we have issued during the year. Here's a formula for fixed assets. Just say carrying value at the beginning of your fixed asset plus additions, the one that you purchased during the year, minus disposal at carrying value minus depreciation for the year is equals to carrying value at the end. Now let's just put in the numbers where they are required. Let's put in the numbers. So we are going to look for carrying value beginning first thing first. Then this is our fixed asset information. Fixed asset at carrying value. Carrying value beginning, which is 2020. How much was it? It is 8878,000. 8878,000 right there. So we're going to put it. Carrying value beginning is 8878,000 plus additions. Let's go to our information and see if are there any additional fixed assets. This is information number E, fixed assets. Let's check, are there any additional fixed assets? They are saying extension to the land and building were completed at the cost of 1,360,000 during the year. Now you know extensions, what? Extensions are additions. Extensions are additions. Okay, let me check the amount again. Extensions to the land and building. When you extend something, you are adding something. So these are additions. 1,360,000. This is like purchasing a new land and building. It's an additional land and building that you have purchased during the year. So it's 1,360,000 plus 1,360,000 minus disposal at carrying value. What is disposal at carrying value? Disposal is whereby we are selling a fixed asset. Okay, let's see. Is there any fixed asset that we sold under assets information? Yes, they sold. They said equipment was sold at carrying value during the year, but they did not give us the amount. It's a question mark. So we're going to say disposal, we did not get the amount. It's a question mark. Now depreciation for the year. Depreciation for the year, they always give us on the income statement. Let's go and check depreciation for the year on the income statement. This is the information from the statement of comprehensive income, which is the income statement. Where is depreciation? Here it is. Depreciation is 785,000. They will never make you calculate depreciation on the chapter of cash flow statement, so you relax here. They will always give you. Okay, depreciation is 785,000. I'm going to put it minus 785,000. Now it's equals to what? Carrying value at the end. We have to check our carrying value at the end from the balance sheet. Okay, this is our fixed assets at carrying value. This was carrying value beginning. We are done with it. Now this is the carrying value at the end. The carrying value at the end is 8865,000. 8865,000. We're going to put it there on our answer book. 8865,000. That's our carrying value at the end. Okay, so proceeds, that's what we wanted, right? Remember I said proceeds is when, I think I might made a mistake there. I said proceeds is when we are buying new fixed assets. Yes, it can be. Sometimes they can say calculate the proceeds for the new fixed asset purchased, or they simply say calculate the proceed from sale of fixed assets. This is the one that we sold during the year, and the proceeds from sale of fixed assets. Calculate the proceed from fixed assets purchased. That one is an addition. Proceeds from fixed asset purchased, this one is an addition. When they say proceeds from fixed assets purchased, that one is an additional. You want addition, but they did not want that one here. They wanted what? Proceed from sale of fixed assets. Proceeds from sale of fixed assets. So proceed from sale is what? Is disposal. That's what we wanted actually, where there is a question mark. Sale is to dispose. To sell is to dispose something. You are selling something. Now, you know, those who are doing maths, they know once we have everything under order here, and then only one question mark, it's simple to solve one leg when the other legs are there. So let's calculate. It's 8888. Okay, let me first give you a simple way of calculating. You see this equal sign here? This equal sign, just change it into a minus. Then you punch everything as it is. As it is, you will get your answer. Now let's punch. It will be 8878,000 plus 1316,000 minus 785 minus 785,000. Then remember here, I said you simply change this equal sign here, carrying value, into a minus. So we're going to minus the carrying value at the end of 8865,000. So we will get 588,000. Going to write our answer is 588,000. That is the proceeds from sale of fixed assets. 588,000. Okay, go back and revise how I reached this amount here. Now we are on the last part. Calculate the funds used to repurchase shares. Sometimes they ask this and say, calculate. They usually say calculate the proceeds from shares issued, which means they want the additional shares that you issued during the year. But now they say calculate the funds used for the repurchase of shares. The money that we use to repurchase shares. It's simple. You simply take the number of shares that you repurchased on your shares information, which is shares information is right here. So the one that we repurchase is bullet number 3. They say we repurchased 20,000 shares. So you simply take that 20,000 shares, you repurchased 20,000 shares, multiply by the money that you spent in order to buy back these shares or to repurchase them again. How much did you spend? It's right there on your information. How much did we pay? Right there, still on your shares information. They say 20,000 shares were repurchased. Okay, how much did we pay? Okay, these shares were repurchased on 31 March 2020. For how much? For 50% more than the average issue price of 9 Rand 10 cents per share. This is simple English. They said, we purchased these shares for how much? They were lazy to tell us the amount. They were supposed to tell us, 20,000 shares were repurchased at 11 Rand, or 20,000 shares were repurchased at 20 Rand. They did not tell us, but they are tricking us into percentage to see if we are clever. That's why they say 20,000 shares were repurchased on 31 March 2021 for, they were supposed to say the amount here. For how much? For 4 Rand or for 5 Rand. But they did not say it. They said for how much? For 50%. Now when there is a percentage, someone start cracking their head. It's simple. But they say for 50%. 50% of what? 50% more than the average issue price of how much? Of 9 Rand 10 cents. Let me take a paper and explain or write it down for you to understand. Okay. So they are saying they repurchased these shares for 50% more, which means 50%, they added 50% on the average issue price. The average issue price is how much? It's 9.10. So you can simply say, okay, they repurchased it at 50% above the average issue price of 9 Rand 10 cents. Sometimes they will say that. The more, they will say above instead of more. They will say they repurchased the shares for 50% above. Instead of saying 50% more, they will say for 50% above the average issue price. Of how much? Of 9 Rand 10 cents. Which means you simply take this 9 Rand 10 cents, which is the average issue price, times 50%. Okay? 9.10 times 50 over 100. So how much is that above? So they repurchased it at 4.55 above the average issue price. 9.10 times 50% is 4.55. What does that mean? It means they've added 4.55 cents on the average price in order to get the repurchase price. So above, it means more than the average. So we have to add on top of the average, 9.10. Okay, so it will be 4.55 plus 9.10. 4.55 plus 9.10. So it will be 13 Rand 65. That was the repurchase price. Another way to do it, the fastest way, you can simply say, okay, they said they purchased the shares at 50% more than the average issue price of 9 Rand 10 cents. 50% more than the average issue price of 9 Rand 10 cents. You simply say 9.10 times. They say they added 50% more on the average issue price. So you are going to say, okay, the average issue price when it stands on its own is 100%. Now when you add 50, it will be times 150 on top. So it will give you 13 Rand, 65. This one is a straightforward one. Now you know what's the money that you paid to repurchase the shares is actually 13 Rand 65. 13 Rand 65. You see, they were supposed to tell you that from the beginning, but they know that you are clever. So that's why they are saying at 50%. They are saying 20,000 shares were repurchased on 31 March 2021 for 50%. And that 50%, that's how we got it. For 50% more than the average issue price. For 50% more than the average issue price. They were supposed to say for 13 Rand 65. They were supposed to say 20,000 shares were repurchased on 31 March 2020 for 13 Rand 65. But they were tricking you and said for 50% above the average issue price. And that's how you solve it. You can go back and watch the video because you'll come across such questions again and again and again. Go back to the video and revise how I did it. So we know the price was 13 Rand 65. So let's go back to our answer book. So we're going to say 20,000 shares were purchased at how much? 13 rand, 65. We cannot say times 50%. We have to put a rand amount here. So 13 rand 65 times 20,000 shares, which means these shares were repurchased at 273,000. These shares were repurchased at 273,000. And you are done. That's how you get your marks. That's how you get your marks. You can look at the answers. Okay. I will do another paper on tomorrow. I will do another paper on inventory valuation, because that's the chapter you are busy with. I will also try and do another one on manufacturing as time goes by. Yeah, but so far, practice the chapters that we did in term 1, because you are writing your June exams or test now. If you forget about the chapters from the first term, you will fail your June exam. Accounting is just like that. If you don't practice, you fail. If you practice, you will always remember that thing. Accounting needs you to be in a perpetual state of practicing. Every time you have to practice, every time. Every day, don't sleep without practicing at least one activity. Smaller nyana, and then you go to sleep. There are no notes that you are supposed to read like other subjects. It's just practicing calculations. Okay, so that's it, guys. That's it. I will see you on the other video that is coming on the other chapters. Yeah, if you have any recommendation, you want me to do a certain paper that you don't understand, you can simply comment there. Then I will make a plan to download that paper and do a video on it. Yeah, so practice, guys, practice. Here are the answers. You can just screenshot if you need them. Yeah, remember I downloaded the paper from Stanmore Physics, and most of my papers I download them from there. All the papers that I do, so you can do them again after watching the video. Thank you. Bye bye.